Hola guys, ¿qué paso? How's everyone doing? This is Hala Pablo. Thanks for tuning in. Let's look at Bitcoin. All right, so similarly to my last video, I have the volume candles on a 2-day here. We're not going to do point and figure today. We're just going to do standard volume candles, and I have a Wyckoff range dating back to the PSI, which occurred back around December of 2020, all the way to the current date today, where we see with a trading range drawn out. Now I have Wyckoff schematics here, 1 grand macro Wyckoff schematic comprised in fractal format of micro Wyckoff schematics, because that's what fractals are, right? They're the same thing, just broken down into smaller components. And so all stock patterns basically are comprised of Elliott waves, and the Elliott waves are what makes up the distinct patterns that we see as complete market cycles, the bull cycle and the bear cycle. And it forms these curious patterns that look similar in all fractal formats. So here we see 2 complete cycles here, which comprises of on the macro, the preliminary supply, the buying climax, the automatic rally, the secondary test, and then leading down into the sign of weakness, where we see we broke the trading range support here, which we drew off the automatic rally back in February of 21. So in my previous video that I did on Bitcoin, we already went through this. I broke all this down here. So just to kind of show you what I did on this chart is I created a trading range based off the automatic rally and the UTAD. Now the UTAD on the micro on this micro cycle here, this first one, the UTAD on the micro is actually the buying climax on the macro. You see what I did here? You understand this? And then similarly, the automatic rally on the macro is where the price action came down and mitigated the, let's see if I can get a pen here so I can show you, mitigated the primary supply, or the preliminary supply here, which we know this is often what happens in bear cycles. They go down and they clear out this liquidity void that was created by the primary supply, which is where the real substantial supply began, putting a halt on the macro rallies that start these bull cycles. It culminates in actually the buying climax, but then the UTADs. Each one has a UTAD, which is what we talked about. These are bull traps. And so the bull trap on the first one was the buying climax on the macro. And then this came all the way down, mitigated the PSY, and this created on the macro the automatic rally. You see, the automatic rally was the trading range support on this one in the micro. So this actually could be, this was a whole new accumulation range here. This is a Wyckoff accumulation, and we could this would be the selling climax, and then this would be the automatic rally, and then this would be it would all be inverted here. But I didn't do the accumulation ranges. They kind of speak for themselves. And then we come back up and we have another PSY where we retest support here. Notice it flipped the support to resistance, and we have a whole new bull cycle, which started with its own PSY on the micro buying climax. This one just had a UTAD. And it was a proper double top, and then came back down. We have the LPSYs, last point of supplies, and so on and so forth. Came back down and almost mitigated the automatic rally here, sign of weakness. So this is all on the macro, okay? I'm not gonna labor too much on this. You just watch the other videos, or you could just, if you don't understand Wyckoff, there's plenty of free resources on the internet where you can learn what all these mean, and you'll see similarities overarching on all these structures comprising the bull and bear cycles. So, but what I want to talk about now is I want to draw a I want to draw a conclusion to where I think we are presently in this top range here. Now you see I did a regression trend from this weakness point. Now look at this very large supply volume spike here that occurred in November of 22. This is a lot of effort. This actually violates one of the main Wyckoff rules, which is effort and result. So basically Wyckoff, one of the rules of Wyckoff says if there's a lot of effort, aka like in the volume, if there's a lot of either buy power or sell power, a lot of orders, a lot of momentum being generated, which is what volume represents, then it should reflect, it should be congruent in the price action. But here we see very little result from gargantuan effort, and so this is actually a sign of weakness. And even though we had this steadily increasing supply predominance from this AR point, it reached this culmination here, the zenith here, but it had very small corresponding result, and so therefore that was a sign that the bulls are now taking over, which we saw in this in the start of this whole new bull cycle, of course, that everyone remembers. It started from last year after we made our low here. And this went back in. We see again, we retested the old this was resistance line. Now it cleared out this liquidity void. Now this liquidity void from this UTAD at this redistribution range here, and it cleared out this liquidity void, flipped it to support, and then we had the start of a whole new back into the trading range. Now notice that the buying climax on the first microcycle makes a perfect 0.5 Fibonacci trading range midpoint, which is where we actually are right now. See, what we are doing now is we are testing the 0.5 Fibonacci point in this current range, which it looks like a top, right? It looks like almost like a quadruple top. The only thing is, though, we have lower highs and we have lower lows, but the waves are expanding in it. And if we look down here in the volume, we see that there's a lot of supply coming in at both the micro resistance and also at the, let's see, the micro resistance. See, now this wedge line here, this would be the trend resistance on the micro. If we wanted to call it the macro, we could even call it the macro, because these are, if we were to blow this up back, if we were to go back down into like a 1 day or whatever, it would show even greater surface area, and it would be even more important for it. But you were able to draw out the buying climax, automatic rally, secondary tests from it. But the waves are expanding, and with the principles of absorption, this doesn't show absorption. This is actually demonstrating selling, like a selling bias. This is market makers, this is informed professional interests selling into these pumps, into these waves here, these 5 waves at the end of these Elliott wave within this structure. And we notice, especially here, when it hit this last resistance point, look at all this supply that came in, and as well as here to mark it off. This was the first giveaway, because we had predominance of supply, which culminated here at this top, at this buying climax. And then we had, as we always do, we have an answer of demand, but this demand produced a failure to rally. Despite all this demand, which preceded pretty much all the demand before it, except for this little guy right here, which was the cause of this impulse wave, which led us to the buying climax here. But if we were going to break this regression trend and the micro trend, then this demand volume spike should have caused it to at least hug this resistance line and create a further bounce by flipping it to support. But we didn't see that. Instead, we came down. So what we're looking at now is the retest of the 0.5 Fibonacci. And as you can see, it doesn't really look very enterprising. We don't have a lot of demand coming in to answer for this. So we are at the bottom of this micro trend resistance of this wedge-like structure. It kind of is a wedge, because the waves are expanding. Usually if they're gonna if the market makers are going to pump from here, we should see the waves decreasing instead of increasing, because the decreasing spread of the waves shows absorption, because less and less supply, or rather more and more supply, is being acquired, being absorbed, being accumulated, with the intent to pump it, buy low and sell high. They're going to pump it high and sell it. But we don't see supply being absorbed here. We're seeing supply unloaded. So really what it boils down to is what happens at this key juncture right here at the 0.5 Fibonacci. And like I said, it's not looking like the bulls have a lot of incentive to predominate. We should have a engulfing bullish candle, and we don't. So these next few days, what we do at this battleground, this is the theater of the battle, this area right here, this 55,000. So, which is the buying climax of the, it's a perfect 0.5 Fibonacci. Everything works out. This is why I love Fibonacci, along with Elliott wave, along with Wyckoff. And indeed, if we do, I'm going to erase all these drawings here, have a naked chart, and let's just do a naked Elliott wave count on where we are. Okay, so this is the 3, the 1, 2, and then the 3. The 3 is the buying climax, or rather the 5 is the buying climax, and then we're coming down for the ABC correction. This is the 5 on the micro, but on the Elliott wave macro, it's only a 3 wave, so we have a deep 4 right now coming in. And so saying that the 4 can either bounce here at the 49,000 point, or remember this was the trading range support line that we drew off the AR back on that first micro rally, on the micro that we had, or the micro cycle rather. And so it could go all the way down to there. The 4 can go all the way down to there and bounce, and that would bring it down to the 43,000 point. And if you've been following my videos, my prior video that I did, I remember I conjectured that 43,000 may be a place where we're going to go visit. And that would, what would that do, guys? That would mitigate the PSY here. So we see these over and over again, repeating these patterns. It's never really cookie cutter, but there's an overarching similarity. Why? Because people are the same. People never change. These are drawn and controlled and designed by fear and greed. And so the principles of fear and greed in humans never change. It's always the same. It's been like that for hundreds of years, thousands of years. And so that's why all of these look similar. We have the PSYs, we have the tops coming back down, mitigating the PSY, making in effect like what I call a Christmas tree. Here's another PSY. Here's the top. Here's another PSY on the way down with the ABC correction, mitigating again. And then here we have the opposite. We have the inversion, and then the inversion here. It's the same thing. So we can reasonably expect the same. Everything depends on the volume, but I am seeing predominance of supply, and I'm seeing effort correlating with the result. So we're seeing a lot of supply, and we're seeing big dumps. So expanding spread, everything is pointing to further bearish sentiment, but don't be surprised if we have a bounce back up to this 5. And because if this is a 4, then we have one more 5, and then on the macro, and this 5 is saying it could reach all the way up to 75,000. So if we see 75,000, so if we rally from here and we go up to 75,000, or if we break 70 again, it's going to entice a lot of noobs to start investing, to start pouring money into Bitcoin, thinking that we're going to the moon. Don't be fooled. Don't be fooled by it. This would prove to be a proper UTAD bull trap, I believe, because we still have to take profit from all this rallying, all this profit. So they haven't really taken profit yet. So these areas, these bear cycles are where they take profit. And we haven't seen this. This is just momentum up here. This is just the market makers selling into the pump, getting them. And then what they do is right at the end, they'll entice a UTAD, bring it back up. That's usually a 5 or a truncated 5 wave at the end of this Elliott impulse. And then comes the macro ABCs, which is what we see here. A, B, C. And then we can see it here again. A, with the PSY, remitigation. This would be the B, and it usually goes up from here. We have a little counter rally, and then it comes, and then it really dumps. And that is what we're talking about. That could bring us back down to remitigate the lows in the 30s or even 20s. So that's what I'm looking at. I hope this gave you something to think about. It's fine if you don't agree with it. I don't have sponsors, and I just tell it as it is. And a lot of people seem to have a problem. Well, not a lot of people, but there are some who seem to have a problem with it. So that's all right. Let me know what you think in the comments, and I'll talk to you guys soon. Safe and happy trading. And let me know what you think in the comments. Like, subscribe, and you'll be sure to get more. I'm going to be doing Zcash. I'm going to be doing Ethereum. I'm actually going to be looking at a couple others like Shiba Inu. I may do Solana and Algorand, as well as Pangolin. Let's see, I have a bunch of them that I look at that I only do coins that I hodl or that I DCA in. Here's synthetics. I do like the derivatives, XLM. I'm not an XRP guy. I'm more of a Stellar Lumens guy. So if you're in the Stellar Lumens, be sure to subscribe. EOS, which is like, nobody really does EOS anymore, but I'm looking at it. Filecoin, and let's see, Matic. So if any of these coins interest you, be sure to subscribe. Be sure to so you don't get updates on them, and you'll get to see what I think about it. Take it with a grain of salt. All right, guys, gone on too long. I'm going to go. I'm going to drink more coffee. And I'll talk to you later. Adios. Bye-bye. Let me turn this off now. There we go. Bye.